This is the Value Investor Podcast with Tracey Reineck. All things value, all the time.
Welcome back, value investors. I'm excited about this week's episode. But before we get to that, I wanted to tell you about a special offer only for you podcast listeners. I know many of you already know that I manage Zach's value investor portfolio. So I thought maybe they'd like to see what's in it. So I'd like to give you the opportunity to go look into the value investor portfolio, see what the picks are, and check out the commentary over there. So you have this opportunity to check that out. And additionally, we have a Zach special report that I'm offering only for you guys on the podcast, and it's called Invest Like Warren Buffett. And I know we've covered Buffett a couple times on the podcast because we would as being value investors, but the special report actually goes over some of the key criteria that he uses to pick stocks, and then it contains 5 stock picks in there as well that apply those criteria to today's stocks. It's kind of a good little report. And if you like Warren Buffett and value stocks, I think you're going to find it pretty interesting. So that's free. You could just go over to zacks.com/value. We have a whole page set up just for you guys from the podcast where you can do the trial on the value investor and see what's in there. There's 20 to 25 picks over there in the value investor portfolio. And then you can also get that free report, the Invest Like Warren Buffett report. So be sure to check that out. It's on zacks.com/value. Now, in today's episode, it kind of ties into what is in that special report, actually. And I was thinking about this as I was preparing today because I wanted to talk about an issue that a lot of value investors face, even Warren Buffett. And it's not just how to find value stocks, but it's how to find the best value stocks, because they're really two different things. Any of us can come up with a list of stocks with low PEs and other value fundamentals, like a low price to book or low price to sales. We can run those screens, but you're just getting this list of stocks with those value fundamentals, but it might not always be the best stocks. So what is the secret sauce that allows you as an investor to separate the good companies from those that are simply cheap, that have the low value fundamentals, but aren't really the good companies to buy right now? So I was thinking about this, and one of the secret sauces I use, and I think that actually is one of the most important ones, is rising earnings. And I can find that out by looking at the earnings estimates, what the analysts believe is going to happen with the earnings for this year and next year, and comparing it to what the company has done the last couple of years. Because if you think about why investors love stocks like the FANG stocks and, the other ones that are the high growth ones that are soaring right now, it's because the earnings are basically soaring too. They're crushing it on earnings, and those are the types of companies you really want to buy. Does anyone want to buy the company that's, cutting their guidance or saying like, hey, we made $5 last year and we're only going to make $3 this year. Oh, well, too bad. Like, no, that's not what we want. We want it going the other way. So if you combine earnings growth with the value fundamentals, that's, as I've talked about in the past, a really strong combination. So let's look at some examples of what I mean by that earnings growth. I get a lot of questions about one of the big biotech drug companies, Gilead. Its ticker is GILD. It's definitely cheap. If you look at the value fundamentals on Gilead, it's been cheap for a year or two now. It has a forward P of just 8.3. So that's really cheap compared to the overall market. But if I look closer at actually what's happening with the earnings, you can see the picture isn't so great there. So earnings are expected to be down almost 31% this year. Gilead made $11.37 last year. They're expected to make just $7.86 this year. That's pretty stunning decline. So from 11 to 7. So when I see that as an investor, even without researching anything further on Gilead, all I know is that they're a drug company. I would look at that and know something's going on. And probably it's a problem in their drug pipeline. Something has come off patent somewhere. There's more competition for one of their drugs. They're not able to make as much off of it. And as a result, obviously, you're getting that earnings decline. Now, I did look at sales for Gilead too, and the sales are expected to decline 20% this year, down to just $24 billion from $30 billion. Again, that's very significant decline. And that puts a real negative blanket over this stock. Even though it's cheap, they're not growing that earnings. When will they grow their earnings? I don't know. You'd have to dig deeper into the company. But as a value investor, I'm going to take a pass on a company like Gilead right now. As cheap as they appear to be, I want those growing earnings. I don't want it going the other way. So I would take a pass on Gilead. And it's a good example of why a cheap stock is not always the best stock out there. And don't just settle for the cheapness. I know a lot of value investors think like, well, the PE is low enough, so I can buy it now and wait out until those earnings change. Well, why wait? Like, get a company that where it actually is already growing. So I looked through to find some of those examples, of course, and I came up with 3 stocks that are values that are cheap right now based on their PE and where the earnings are actually headed up. So my first stock is an interesting name that I'd never heard before because it turns out they just went IPO. So this is even more interesting because, you know, as value investors, we normally don't get these like recent IPO type stocks because they're always overpriced. But the company name is Epsiode Holding. The ticker is ICHR. It's obviously a small cap, $593 million market cap. It has a PE of just 11. It makes gas and chemical delivery systems for semiconductor process equipment. So all I saw was, I don't really know what that means, but all I saw was semiconductors. It's somehow involved in that area. Of course, this is a super hot area. And so the stock has tripled since its IPO in December of last year, 2016. But again, the PE is just 11. And why is the PE 11? Because the consensus estimates for this year are calling for $2.05. And they made just $1.16 last year. So that's EPS growth of 76%. I also took a look at sales because it's not all just about earnings, and sales growth of 44%. So something good is happening, and the semiconductors are very hot right now. Anything associated with it, their earnings are soaring in that area. So this is one you might want to check out. It's been kind of a wild ride since that IPO. It's been going to the moon. So if you get some kind of pullback, it's an interesting one to consider, but it's still cheap here at just 11 times. So that's Epsiode Holding, ICHR, and they're out in Silicon Valley. So that's the first stock. Our second stock is also in the semiconductors because they're all basically still cheap here. So I'm not going to stay away from them. And it's one of the big gun guys, Applied Materials, AMAT. We all know the ticker for them. Demand is not softening yet in the semis, and 2017 is still supposed to be very good. The semis can be cyclical, but a lot of people think with the artificial intelligence, we might see a longer drawn out cycle and stronger demand in the semis. They made just $1.75 last year, and then the consensus is really up there. It's looking for $3.09. So that's earnings growth a lot like the last company of 76%, sales growth of 30%. Their PE is 14. That's still relatively cheap, especially compared to the overall market. They're off the highs recently because the semis were kind of up and away. They pulled back as tech stocks pulled back in this recent little sell-off. So this is one you might want to keep on your radar, or, you know, you might want to consider if you're looking for value stocks with this earnings growth. So Applied Materials is that one. And then our third stock is in a sector I talked about a couple of weeks ago that remains one of the hottest sectors out there that no one is talking about, and that's the home builders. And this one is MI Homes. The ticker is MHO. They're based in Columbus, Ohio. They basically build mostly on the Midwest and East Coast. So they're in Florida. They're in the hot markets like Raleigh. They're all over Ohio and extend over to Indianapolis. They are one of the smaller home builders. Their market cap is just $686 million, but they have a PE of just 9. So they're real cheap here. Shares are up for this year. They've pulled back a little bit, but their bigger competitor, Lennar, just reported earnings this week. They saw the best quarter for orders in 10 years. They see strong demand. I do believe if you're seeing it in one home builder, all the rest of them are going to see it too. So super positive report out of Lennar. Makes me really bullish about all the other ones. They made $224 last year. They're expected to make $305 this year. That's a great 36% increase. Sales are expected to be up 15%. Housing is strong as that job market stays strong. People are definitely out there buying. Mortgage rates haven't spiked to dangerous levels. They're still near those lows. So that's helping home buyers as well. So love the home builders. And this is one you definitely should be watching as a value investor. And that ticker is MHO. So that's like 3 kind of interesting stocks here that are values with the growing earnings. And you want, as a value investor, to look for those that are just kind of, the slow and steady. Sometimes that wins the race. The semis have been hotter, but as a value investor, you sometimes can get in those hot areas. That's, let me recap the tickers for you again. There's Gilead, which I don't recommend buying right now. It's one to keep an eye on. We can see if that earnings, story starts to turn around, but doesn't look like it is going to anytime soon. But that ticker is GILD. Then you have Echor Holding, ICHR, Applied Materials, AMAT, and MI Homes, MHO. And I want to just confirm again, if you do want to get that Invest Like Warren Buffett special report, you can go to Zacks.com/value. And you can also try out the Value Investor over there. So when you try out the Value Investor and check out that portfolio, then you'll get the special report along with it. So that's kind of a good deal. I'm offering it only to you guys here on the podcast because I know you're all value investors and you're caring about Warren Buffett's investing ideas. And you can also follow me on StockTwits if you want some more just random stock picks. And if you want to know what's happening with earnings, definitely check out my StockTwits feed because I post a lot about the earnings charts over there. And that's just at my name, at Tracey Rynick. And I do encourage everyone to listen in on some of our old podcasts. They're old, but they're not bad. They're still good. There's still a lot of good information in there. And definitely check out the one about the home builders that talks about the hottest stocks of the year because they still are performing as well as the tech stocks. Crazily enough, I know no one believes it because everyone thinks home builders are boring, but they're not. So check out that one. You can check it out on SoundCloud. You could subscribe over there. And we also got our own feed on iTunes now, on Apple Podcasts, as they like to call it. So you can subscribe directly on Apple, on iTunes to get just the Value Investor podcast. So definitely check us out on all our locations, and I'll be back next week with even more value stocks.